Good morning, everyone, and welcome to the weekend update. I actually debated playing the Doom song in the background here, just given what happened out there in the speculative part of the market in the last week. Despite, and really, it was a small downside move last week. Despite that small downside move, you had guys jumping out of first floor windows. Crazy selling out there. It was one of those things I've been warning about over the last month about traders out there being too large in positions, too exposed, not enough cash. And what you saw last week on those red days, Tuesday and Friday, was guys not getting to a comfort level when they should, overexposing themselves to the market, and then scaring out very quickly. A couple of times, and actually what we've been seeing in a lot of these stocks, even though the large caps have only really been barely down, we've seen a lot of huge selling in all the mid and small cap stocks and the tech stocks. That's where all the speculative money is. And a big driver of that, again, is a couple of things. A couple of weeks ago, we had like 2 stocks left under $1. That just shows you the kind of mania that was out there. The other thing, guys just overloading. They want a Lambo on every single trade, and when they wake up in the morning and they see stocks red, they start to panic because they have too large positions. You don't think that shorts and the algos know what position sizes guys are and what it takes to push their buttons? I mean, we've seen stocks in pre-market a couple of times last week down 50, 60 cents on 10K volume. That is just utter silliness, but they do that to scare you. And if you're overexposed in stocks, that is the kind of stuff that's really going to put you in a panic mode. Now we're looking here at the Dow daily chart, and you can see really not a whole lot to say about it other than it was a big sell-off. If we look at the 1 hour chart, here you can see it was just straight down with some bounces in between. And you know, the same thing, that the real victim was, of course, the tech stocks. I did not adjust the uptrend line that was in place. Techs really took it on the nose last week. You can see right here, the 310 level held all 3 days of the sell-off. Now, volume exploded to the sell side. And if we flip a little bit lower here, MACD is in the basement. Stochastics are in the basement as well. Now, the last time we saw a sell-off like this was going into the election back in October. We had a 10% rapid sell-off over the course of a couple of weeks. And here, you know, this sell-off really started a couple of weeks ago in the large cap stock. And we're down 27. We're, you know, down 8-9% already. Kind of similar to what happened in October. And when we got down to this level, it rebounded quickly. So what is the driver of this sell-off? Now, you'll hear a lot of chatter that the big reason we're having this sell-off is valuations, but that is only a tiny piece of the puzzle. The real reason we had the sell-off that we had last week was the 10-year treasury yield. For most of you guys, we haven't really had to talk about this for a few years, a couple of years anyway. So if you're a pandemic trader, you have no idea what the hell this is and why it's impacting the market. This is one of the interest rates that the market uses to determine their speculative level for all intents and purposes. That's the easy way of explaining it. Right here, you can see over the last month, we've gone from $1.10 and it hit $1.55. So that's essentially a 45-50% spike in short-term rates over the last couple of weeks. This is what spooked the market. Now, this is not the first time this happened. This actually happened at the end of December into January, real briefly, and then it ended up selling off. So we're in overbought areas big time on this, and this is what's going to be the driver on the bounce back. The Fed does not want this to happen right here. The Fed, when we had that sell-off on Tuesday, Powell had a speech and he came out and said there's no inflation. There really is none, at least what inflation the Fed looks at, and they're going to continue to ease. And the market rallied back big, and we had that huge 400-point up day. Then, of course, rates spiked again because, hey, the market is trying to fight the Fed here. Silly. Don't fight the Fed. I would be very surprised if the Fed, Powell, or one of the Fed governors does not come out and start making comments in the next couple of days here on the market to bring these rates down. And when we start to see this drop nicely, you're going to see that money flood back into these speculative stocks, namely the large cap stocks or large cap tech stocks, and the rest of the speculative part of the market that we like to trade in. Couple of plays that should do that. AI, ouch, but I'm holding my ground on this one. This stock has gone over the last 2 weeks from 175 down to 112. It's stabilizing down here in the 112 area. This is the kind of stock that when we see this interest rate spike reverse, we can see a $10, $20, $30 bounce on this really, really quickly. The other stock you watch in this, of course, is Tesla. Tesla is another one of those big stocks. It sold off steeply on Tuesday, where we were able to pick up some shares, and a couple of hour later, 2 hours later, and the next day it was plus 100. These are the stocks. Tesla actually mirrored the action in the market really, really good last week. So this is definitely a stock. Even if you don't trade it, you want to keep it up on your quote screen because it'll give you an idea of what the sentiment is out there in the market. And sentiment is what we use to trade. If the sentiment in the speculative stocks, the large cap speculative stocks, is not there in the market, you sit back and do nothing. On Tuesday last week, we were out there actively buying because the action was there. On Friday, we were sitting on our hands. These are things that when you've been trading for a long time, you'll start to notice and learn to do it. Remember, I keep saying it in the chat room, no trade is a trade. So you do not have to be trading all the time. We've been going 100 miles an hour for a year plus in this market. The analogy I've given in the chat room is, we're a race car. We got to change the oil. We got to change the tires. We got to slow down every once in a while. Welcome the slow times, because when it reverses, it will reverse good. Now, if there's a positive in all of this, just like back in, let me pull up that chart. Just like back in November, the quick sell-offs usually lead to very quick rebounds. We want quick sell-offs. When you have a quick sell-off, that means the quotation mark bull market action is still in place. It's that drip, drip, bleed, bleed, slow move down sell-off markets that are the worst. Fast, rapid, scary, oh my God, sell-offs. Those are actually where the opportunities are for gain. So let's jump in and look at some stock plays. AEHR. Now, if you've had your head in the sand, you probably don't know anything about the chip shortage going on with the auto market, but I suggest you go out and try and shop for a hot new car. And I'm not talking Lambos and all those other nonsense overpriced things. I'm talking regular cars, F-150s, etc. No deals on them. If you go in there, the salesmen have already got the gist where they go, yep, chip shortage. We don't need to give you guys any finance offerings. Supply is limited, blah, blah, blah. These guys are a player in this market. Now, if you look here on this chart, every time we see MACD get extremely oversold like this, we see a big bounce back. It's been bouncing back about 30 to 60 cents on each one of these moves. So under $3 looks like a great pickup here for that 30, 40 cent move that we've seen on the chart repeatedly. Another chip stock that we're in, TAIT. TAIT has actually held up fantastic during this last week's sell-off. It's in a solid uptrend. They pay a dividend. Check here at stochastics. This up and down action tells me this stock, if they manage to put out a press release or we get some more news on the chip order, this could be a very, very nice player on it. MOSY is one that we have been playing on this one. Anything around the $5 level has been great for an intraday pickup for whenever these bounce and get headline news. It's bouncing back over 6. So we've got this nice little Ranger play here, 475 to 6. Those are the kinds of plays that make your swing positions free. And we talk about that a lot. ASTC, this is our space biotech play. Nice big sell-off on this one over the last week. MACD in the basement, stochastics in the basement. This should be a solid bounce candidate this week. Now, just a little caveat here. Bounce candidate. It's all going to depend on how the market reacts. If we see the market up 100 or 200 points on Monday or Tuesday, we're going to see a lot of these stocks put in big bounces. But like being overbought, oversold can become more oversold. What I like to do in a market like this is tiptoe into these bounce plays. I don't buy full positions when I'm buying these. I buy partial positions in case I'm too early. And many times our mantra is we're always early. So you have to give yourself room. And having strict discipline is where it comes in markets like this. Imagine being someone who is 90 or 100% invested in the market right now. They can't go shopping for stocks. And more times than not, those guys who are 90% invested, they don't like to take losses, which turn into bigger losses. Us, hey, if we need to sell, we can always rebuy. We've got cash to deploy, and when these opportunities come back, a guy who's in from 350 and has no ammo to buy 320 or 225, when this stock goes back to 350, he's in the same boat. The guy who has cash, who's able to buy down here, he's loving what just happened. That's part of that strategy, that strict discipline strategy. COMS, these guys have their fingers in a lot of pots. They also own a semiconductor stock. They're USA. The space ETF is coming next month. Well, next month. Tomorrow is next month. So the space ETF is coming 4+, deep oversold. If you look at the chart, all the indicators are at the bottom. So all these stocks are just waiting for this to sell off and the headline news to change. That's all it's waiting for. VISL, this is another one. When things are bouncing, it gives excellent bounce moves. So I would be eyeballing this one depending on how the overall market is tomorrow, looking for some bounce trades. MDGS, we finally got that offering. We knew it was coming. They priced it, and now it's in. You know, if they were to investigate something, they should investigate the BS that goes on with a lot of these stocks where we can actually tell that an offering is coming. They hold the stock back. They short it, all stuff that they should not be able to do. And then the offering comes. When the market bounces back, this should be a solid bounce play back up there. I mean, this stock is still lagging the moves we've seen in a lot of the other plays. Same drill. MACD in the basement, stochastics in the basement. Going to be a very nice bounce on this one near term. This is the 1 hour chart. You can see here, panic sellers, volume getting lower and lower. Now, the good thing on a lot of these stocks, and I say that good thing even though we've got a position and we've been riding them in, by the time we get down here, a lot of the weekends have already thrown in the towel. They're done. They'll probably rebuy these stocks after they bounce back because they're scared. They get the relief thing. And then once they see these stocks bounce without them, they get FOMO and they jump back in. That is not trading with discipline. Bitcoin, of course, got hit over the head. MKGI is one of my favorite crypto plays. It's actually found a good support here despite the continued sell-off. So that's a good sign for when we see things bounce in the coming days. Wanted to make a quick mention on LightPath, LPTH. A lot of chatter about LiDAR. Undiscovered LiDAR play really hasn't done the moves that we've seen in the other stocks. So this is one, you know, if the sell-offs get silly on it, one I'd be looking to pick up some shares in. Next up, MRIN. MRIN just had the unfortunate timing of releasing their earnings report into a sell-off. They had Amazon sprinkled all over their press release. A week ago, if that press release had come out, they would have been chasing this stock at $4 and $5 after hours and pre-market. But alas, they pushed it out with a red market and down we came. This is a very nice support level on this one. Again, a lot of these stocks deep oversold, but you can see there's lots of big moving average supports just below on these stocks. This is when, again, I hate to beat the dead horse again, but this is when having that strict discipline, not being overloaded in plays, you can give these stocks a little bit of room because you know you're going to be able to pick up shares a little bit cheaper for the inevitable bounces. NLSP, uplisted, low float biotech stock, sitting on this one. Now, the one that really looks interesting here is SXTC. Did a reverse split, straight down. You can see this green line here. This is the 20-day EMA. And actually, when you're looking at this video and going back, that is my absolute favorite moving average for looking for bounce plays. Right now, the 20-day is 296 on this stock, and we're down here under 2. That is a 50% divergence. Usually anything over 30% is a big time look get ready. It's going to bounce kind of moving average. I love the 20-day. So if there's anything you would take from this video today, this is my favorite bounce indicator. 20-day EMA, the most simple thing in the world. And when you come to stocks, simple rocks. This would be the bounce. MACD deep oversold, stochastics in the toilet. If they did a reverse split, straight down, sell volume is drying up. This will be a nice candidate for a big bounce when it happens. ITP is run by the same people, I guess, their IR department as Gishi. That's all I got to say here. Instead of pushing out their news, they dropped another offering. But on the positive note, it's stabilized here. It's been holding above, at slightly above its offering price. Again, this is going to be another one. When we see stocks bouncing, you could see a 15, 20 cent, 25 cent quick bounce on this one. And that's without news. If they actually got their news together, you could see more. Now, again, that depends on how the overall market is doing. So, again, all these chart setups are dependent on what the 10-year does. So, hopefully, we see the Fed come out and talk that down. Now, UAMY. This has been a phenomenal trader now all of a sudden. It's got a magnet to 2+ on its bounces. Had that big sell-off on Tuesday. Huge bounce. I mean, really, over the course of a few hours, it doubled from its lows. It's been slowly bleeding down there. We still have that battery news upcoming. Why they haven't pushed it out yet is beyond me. But, you know, some companies just don't have good IR departments. Last stock I'm going to mention, and if you got here to the end of the video, great, because this is my favorite stock going into this week, XPL. Now, we've been playing this one. You guys know all the research on it. They've got a conference upcoming in a week. This should be a very active stock in the near term. Now, when I talked about this one before, I said, you know, we've got a nice swing position in here, but depending on the market, you could see this one in the 80s. And that is why when you look at a chart and you're buying a position, you always have to have in your mind what the potential downside is. And that's what you use to position yourself. If you're in here and you know you could see this, do you buy a full position? Of course not. But a lot of guys forget to do that little bit of math in their head and look at their own risk tolerance. I'm perfectly okay adding more shares here if it came. But I want to have shares in case this doesn't come and it goes up here. That's how I approach trading these stocks. So that's it for the video, guys. Enjoy the rest of your weekend, and I will see you all in the chat room tomorrow.